Hey, Trisha, good to see you.
Good morning, Yev. How are ya?
Good. The year is flying by, summer's flying by.
I know. Kids go back to school on Monday for us, so it's kind of crazy.
Yeah, I hear you. Speaking of crazy, so I sit on two nonprofit boards, and one of the board members, the nonprofit had some kind of dinner that was hosted by the board member.
Okay.
And as treasurer of the nonprofit, he sent me an email basically saying, "Oh, I don't want reimbursement for the dinner, just consider it a donation." And I'm like,
Mhm.
okay, so you mean in-kind contribution? Immediately. So I'm curious. I
Yeah.
mean, this comes up quite a bit, right? And it's fairly specific to just the nonprofit space. But can you maybe just go over what are we even talking about with in-kind contributions?
Yeah. So in-kind contributions can either be goods or services, materials, for instance. So in your case, right, you're talking about a dinner, so that's a tangible good. So in instances where there is a contribution and the intent is a contribution, then those would be in-kind contributions. And I'll be honest, as an auditor, this is one of the hardest things for us because it's easier for auditors to test existence than it is to test completeness. And it's one of those things that I feel like a lot of clients miss. Yes, it's a wash, right? You have contributed in-kind revenue, you offset it with your in-kind expense. So what's the value? What's the benefit? Sometimes the organizations that I work with think, well, what difference does it really make? But it actually does make a little bit of a difference because again, the people who are contributing their time or contributing their money or contributing whatever they're providing for like, a white auction, a gala, those types of different things would come with a lot of in-kind contributions. They want to be recognized, and it is a tax write-off for the individuals as well. So that is one of the big key things. As long as it's not services, services cannot be deducted, but the goods and the time that you spend the money on can.
Interesting. Okay. And from the nonprofit's perspective, I've always used looked at it as kind of like a risk that you don't recognize it because I suspect especially with the example of services, right? Let's say
Mhm.
you get a lot of pro bono services that if you don't recognize the value of those services, presumably if you need those services to continue to survive, you wouldn't really know how much you would have to pay now if they were no longer donated, right? So like you're
Yeah.
misstating you're missing a big portion of what is contributing presumably to you running operations.
Right. Yeah, that's a great point. Great point, for sure. You would have to definitely want to know because again, when we look at contributed services in particular and how they're valued, you're looking at what would be the market rate you would pay if you were to purchase those goods, right? So a great example is like our services that we provide. Like me as an auditor, I do a compilation free of charge or pro bono for my alumni association that I sit on the board for. And so I keep track of all my hours. I keep track of the hours that my tech reviewer, whomever that might be, does, and I will provide whatever our market rate is. So if it costs me $4,000 to prepare that compilation for them, that's what I would provide to them as an estimate because that's how much they would reasonably pay in the market space when they have procured those services.
Okay. And speaking of valuation, and you had mentioned earlier that there's primarily two key groups, right? There's the goods and the services when we're talking about
Right.
in-kind contribution as a whole. What about on the good side? What is the valuation easier almost on the good side, or it really just depends?
It really just depends. So if I think about it, like a lot of times, some of my organizations will get donated licenses, right, for a software, right? That's pretty easy to value because the vendor can just be like, oh, well, I give you 10 licenses. This is how much we would typically charge a nonprofit. And done. Easy, right? Meanwhile, let's take, for instance, a Goodwill as an example. They're not a client, just out of disclaimer, but they are a very well known nonprofit out there that accepts a lot of in kind goods. So clothing, for instance, or I don't know, some other household small appliances, etc. There's actually a thrift store value that you can utilize to be able to value those items. A lot of times, organizations also do it by pounds. So they'll have a weighted scale and they'll just do an average for the weight of what they got in. So for instance, like a pantry for a shelter, for instance, will do weight by food. And I think it's Feeding America that provides the valuation typically each year of how much per pound it is. I think maybe about $1.50 or so, whatever it might be for today's market rate that they have provided, but they'll do it by weight as well. So that sometimes is a little bit easier. But again, when it's like me providing something and I'm like, hey, here's an air fryer I have that you can utilize in in a house for a client, for instance, how much did that cost? How much is it worth today? It could be a little bit trickier, right? I may have paid $100, but I've used it for 5 years. So, again, the store value is typically pretty safe.
Okay. And I think something that I've seen a few examples of fairly recently is this concept of contributed, I guess, in-kind contributed leases or below market rate
Mhm.
leases. I don't know if that's just post-COVID, something that's a fairly new phenomenon. I'm not sure. But what does the accounting look like for that, and what are the implications for these below market leases as it relates to in-kind contributions?
Yeah, so let's start with an easier one when they're not below market. Like for instance, they're just not paying anything. That's pretty easy, right? They would go out, and there's no lease agreement. Let's say there's no like long-term lease agreement, it's month to month or what have you. They would just go out there and they would look at whatever the average market for square footage is, take their square footage of space, multiply it out, and they're done. That's their valuation, right? Something reasonable. We typically like to see about 5 comps for space in that prevailing area for that market. But that's typically what we look at, is just kind of like an average. Then I've got other clients of mine who, for instance, are on a long-term lease agreement, let's say 5-10 years, and they have received a in-kind contribution for a portion of the lease payment. So yeah, that you're talking about, that below market rate is what they are paying. They're paying 25% of that market rate. And so that other 75% would have a calculation within that lease agreement, just like you would under ASC 842 for leases, right? You'd have your right of use asset for that 25%. You'd have your long-term lease liability, your current lease liability, but then that other portion becomes a contribution receivable because you are expecting it to come in the future. You have a record of donation from the donor that is stipulating that, hey, we've got a long-term lease agreement for 10 years. Of that, I'm going to provide you 75% off of that market rate, and I'm going to provide it to you for the rest. So that becomes a contribution receivable that you are then going to continue to amortize as the time passes as well.
Okay. Okay, that makes sense. Yeah, because I was kind of thinking through my head the accounting and how that will work, but it's just you ratably over time basically recognize it.
Mhm,
Okay. And
mhm.
I guess speaking of below market, the other question that I sometimes get is, well, what if the services provided by, let's say, a professional services firm is not pro bono, but it's discounted? Does the value of that discount become an in-kind contribution at that point?
So it's an interesting concept or question simply because it depends. It's always the answer, right? It depends on what the intent is, right? So
Okay.
most of our services, we provide a discount because we work with a nonprofit, right? Like my billing rate is almost $500 an hour, but let's say I only charge 80% of that.
Hmm.
That discount is not considered an in-kind contribution because inside of my agreement, I'm stipulating the services and scope of what I'm providing, and I'm providing it at X rate. So it's not necessarily the intent that I am providing a contribution. Whereas again, on the flip side, if I think through the compilation example that I provided earlier for those pro bono services I give to my alumni association, that is an intent for a contribution to be provided. Now, again, if I'm sitting there and I'm saying, hey, we are in outsourcing, for instance, again, a discount or a contribution pro bono could impair our independence on a review or an audit. So we have to be very, very careful with that. But let's take your department, yeah, for instance, outsourcing, right? You could say, hey, for the first year, I'm going to give you a 50% discount on our services and provide that to you at that discount because you're starting up. I want to give you this contribution. That's an intent. That is actually an intent for a contribution. So it's a little bit different in the scope and the realm of what you're providing. You are giving them that discount on the market rate that they would typically have to lease them.
Okay. Which is, I guess, when we talk about intent, a lot of it comes down ultimately to at least from the auditor's perspective, like documentation of that intent. And
Absolutely.
perhaps more holistically, like when we think about in-kind contributions as a whole, what are the kind of documentation you're looking at as an auditor to get comfort around it, but then also on the actual audited financial statements, what kind of documentation do you have in the footnotes surrounding in-kind contributions?
Yeah, so a lot of times we're just looking for whether they've gone out and done comps. Like a lot of times donations will come in and the donor or the vendor perhaps won't provide some information. So they have to actually go out and get some comparables for other similar items in the market space. Again, if it's a used item, we're looking at thrift store values. Potentially, I think Salvation Army is typically the ones that I go to because they list a lot of different things and how much it might cost. Again, I think it's Feeding America who does the poundage. So we're looking at some kind of a documentation in terms of what did you get in by individual items, and then what is that value that you are placing against it, and how did you come up with that value, right? It's all about the reasonableness of the documentation. Then on the flip side, when it comes to the actual footnotes, there are a couple of different pieces there. One, we have to know if any of the goods were monetized through sale. So take, for instance, if you hold a gala and you have some donated goods that have come in, are you auctioning those off? Are you getting money in return for those donated goods? That is something you would have to disclose through that process. The other piece too is if there's any donor restrictions. So sometimes a donor could provide something and say, hey, this has to be used for X program and only that program. I'm thinking about like a social organization that has both a shelter and has a pantry. Perhaps they're providing a donation and they stipulate, hey, I don't want this to be used for the pantry. I want this to go to the shelter specifically. So that's a donor restriction. And then the other piece of that is that we're looking at the breakout of what programs and functionally those types of in-kinds have benefited. So did they benefit 100% of programs? And if you have multiple programs broken out in your financials, we would need to know that information. Or is it perhaps something that's just helping you administratively? Like, for example, I gave the licenses that were provided for a software vendor or by a software vendor, excuse me. So those would be something that perhaps was for an administrative operational function that would then be put there. So those are the types of things we would need to disclose within the limits.
Yeah, and I think you had summarized it quite well, like other considerations surrounding the in-kind contributions as a whole. But I suppose in closing, is there anything that we haven't yet discussed that you in your experience typically encounter with in-kind contributions beyond the valuation? I think a big piece of it sounds like is valuation, the documentation surrounding it. It's interesting you mentioned existence is a bit more difficult to test because I would have always assumed it's completeness, at least from the outsourcing side, getting together with the client and thinking through, okay, what's the total population of potential goods and services that were donated this year? But anything else?
Yeah, that's the hard thing for us auditors to look at though, is because for instance, if we have a client that doesn't typically get in kind, and then all of a sudden in 1 year they do, they may not think through that
Right.
that has to be recorded. And unless we have a specific conversation about it, sometimes it can be hard to know that that's there and that that's missing. So
Exactly. Yeah. How do you
that's
catch
why
it?
sometimes the completeness of the in-kind portion is a little bit difficult. Testing the existence is relatively easy. Give me some of the support for that, and then I can move on.
Yeah.
So, yeah.
Right.
But I think we've touched it all. I mean, at the end of the day, in-kind contribution reporting and accounting is pretty simple, I would think. There are obviously some things, some circumstances that may warrant a little bit more complexity, like the lease agreement, for instance. But at the end of the day, that's what we're here for, right? That's why we have this expertise and this knowledge, and that's why we are always available for any questions.
Yeah. And that's the key, I think, too. I've always encouraged clients that I work with, if we're not sure, reach out to the auditors during the year. They're there to help. Doing so, I just think really makes everybody's life easier come audit time.
Absolutely.
Great. Well, thank you for this discussion as always. It was great to see you.
All right. Thanks, Yev.
Thank
Talk to
you.
soon.